What is going on, guys? I hope everybody's having a great and fantastic day today. We're going to be talking about support and resistance lines, how to use them when swing trading stocks and even day trading. So it's going to be a very educational video, so I hope you enjoy it. And if you do, drop a huge thumbs up on the video. It will be greatly appreciated. So let's get right into it. So looking at the stock here, we have ticker symbol DRN. Now this is an ETF, also known as a external traded fund. It's the exact same thing pretty much as a stock. You can still make money off it and buy it and sell it and do all that other fun things here. Now, looking at this stock, you'd think, okay, well, we have some buying pressure, some selling pressure, but we're going to be talking about pretty much how to make money off these trades or off these price actions. So, looking at this stock from the beginning, we had this huge bull all the way up to almost $30 here. Now, a good way to draw support and resistance lines is to pretty much just mark out the peaks of the stock. And a good way to do that is to pretty much just draw it on top of the mountaintops. So you can draw it all the way up here. That's what we're going to do. There we go. So we're just going to draw it at the peak of that. But now let's start back at the front. A good way to find support and resistance lines, guys, is to go left and then follow the trend to the peak. So very simple. So we're starting here, we go left, the trend is up, so we follow it here, then we drew the line. Very simple, because that's the peak. Now go left, follow the trend, find the peak down here. Boom. Now the difference between support and resistance lines is very simple, everyone. So support is pretty much when buyers tend to enter the stock, and that's when we have this huge price action going up. And resistance is the exact opposite. That's when buyers tend to exit the stock, and that's when we have some selling pressure and have some sort of pullback, which is very common in every stock that you'll see. You'll never see a stock that just skyrockets up and never stops. You'll almost always see some sort of pullback, and realistically, that is pretty much just one of the best ways that you can enter a stock. But yeah, so let's jump right into it here. So we're talking about going left, follow the trend, and that is a fantastic way to find support and resistance lines. Now, this stock DRN is a very easy to read stock, so I hope you guys can see what I'm seeing. I'm going to be talking to you guys about it. Alright, so pretty much I called this stock out back in last July or June. Well, anyways, one of these here. I said, well, this stock has some support on this moving average line. If you can look closely, you can see we have 4 different lines. Now, each of these act as a support or resistance points for the stock. Now, the 200 is the yellow. The 90 is this lighter pink, the purple is the 20, and the blue is the 9. Now, pretty much what they do is they will average all of the closing prices of the past couple of days that you put in the time. So for the 9 moving average line is the past 9 days closing prices averaged together to create this line. And then the 20 is the past 20 days, then the 90 is the past 90, the 200 is the past 200 days, and the 200 tends to be one of the strongest indicators that you can use for support and resistance points. So now looking at this, you're starting to get a little clearer understanding. You can see, okay, this stock found some sort of support on this 200 moving average line and then continue to rally up. Now let's look at this segment right here. Now we're going to get rid of all of these fancy drawings here, and we're going to just have you guys look at it for a minute. If you guys want to pause the screen and you guys can mark out your own support and resistance points, that will be fantastic. Alright, so now if you guys saw what I saw, you can see that we have some beautiful resistance up here at around 2416, 2410 in that area, and that's pretty much when all of these peaks hit it and sold off, hit it, sold off, hit it, sold off, almost tapped it again, hit it, sold off, hit it, sold off, hit it, and then we had this huge sell-off. And that is very common. If this stock doesn't break this resistance, probably on the second or third try. Often we'll have some sort of pullback or some sort of sell-off, and that's what we had down here. Now, looking at some support for this stock is a little more tricky, because you might think, well, Carter, it's there's multiple levels. We have some here at 2118, we have some more here at 2016, and then we have some more here at 1931. And that is true. But another thing that you can do that is very, very helpful is to draw trend lines for support or resistance points. And that's pretty much when you click and you want to map out all of the peaks on the bottom in a row with a straight line. So it's very simple. So you just, left click and then bring it all the way over here. Now, the reason why I'm putting this back is because, as you can see now that it's drawn more clear, you can see the stock bouncing on almost all of these. Here we had a lot more buying pressure, I'm sure, so we had to tap it again. And then here, you guys can see we have this false breakout right here, and that's pretty much when the buyers, that's pretty much, man, I jacked that up for you guys. I'm sorry. Hold on, just give me a minute. Yeah, all right, you can see it a little clearer. All right, so it's right here, guys. So what this selling pressure is what you call a false breakout. Now, this is when the stock will have a surge of buying pressure and then get slammed with selling pressure. Now, the best way to not get caught by this is to read either level 2 or time and sales, but we'll talk about a separate video about that, explaining it. But so that's pretty much just a false breakout. So you can pretty much find that just by pretty much anything, just by reading time and sales, level 2, and all of those are just indicators to help you trade. So now we had some huge selling pressure, guys, huge selling pressure. Now, this stock right here bounced and found some sort of support at around 14.16, and then had this huge buying pressure. Now, if you mapped out the same support or in resistance points, you could have definitely made money off this move. Now, it rallied all the way up here to that resistance at 14.28, and then we had this selling pressure. Boom, all the way back down with some sort of pullback here. Realistically, this is where you'd have taken profits from that trade. You wouldn't have held it because you most likely would have gotten stopped out. But so you could have made money pretty much at multiple locations. And then we had some more huge selling pressure. Now, what I always will do is I'll always set an alert down here. So now I know the next time that this stock falls, I am going to be ready. And I'm going to be buying shares of this company or ETF, because I know that this has had multiple times where every time it fell, it pretty much got bought back up. So it's some beautiful, beautiful support. So now, looking at this stock, it crashed all the way back down, and then boom, you guys should have went long right in here at this support level and taken profits all the way up, and you literally could have gotten perfect fill at 14 or 24.14. Now, what I would have done to minimize risk is I would have set my stops right below here. At 14, probably $14 whole. The reason why I do that is because whole or half dollars tend to act as a stronger support or resistance points, rather than just any old stock number, because people are more interested on buying at whole numbers and selling at whole numbers than any other price on the chart here. So I would have put my stops right here at $14 flat. So if this had some sort of sell-off, we would be out, no harm, no foul, with probably $200 loss. But the upside to this was enormous, with a 60% profit on it. So that's what I would have done. And obviously, I did call this stock out way back here when it was riding up here. And then I kind of did not set my alerts down here, but I should have. So now we're going to be ready if this thing falls. So this stock right here, DRN, is pretty much just a stock that is very, very very priced watched. So people set alerts to get good fills, and that's what you got to do to be in the game. But a stock like this that we're going to show is one of the most commonly traded stocks on the market here. Now this is Apple. This is the past year or last 3 years. So pretty much we had this huge huge buying pressure, guys. Huge buying pressure. Now you pretty much could have gotten in all the way back here, but you most likely would have missed the move. Now every time this stock continues to go up, you always think, okay, what's the risk for it? So pretty much the risk is share size and price. So if you buy it at a good price, with a good number of shares, you can make money. But if you buy it at a bad price with the same number of shares, you'll lose money. So price and share size is very important. So pretty much what I did here, as you guys can see, is I waited for the break of this 20 moving average line because I saw that this thing was literally riding it all day. And so what I did is I set some alerts, guys. I set some alerts for the break of it. And as we broke it, we had this huge sell-off all the way back down here. And so that's pretty much what I did. I bought in and I said, okay, we're going to, whoops, it's not the drawing tool I wanted for you guys. But I got in right here. I said, okay, we're going to set our stops below this. So it's going to be a $9 per share loss. But the upside, just to break even, would be, maybe an $18 profit. So, 2-to-1 profit, risk management, decent, obviously it had some problem breaking at this price movement right here. Because you guys can see it double tapped before it broke. So it hit it once, came through, hit it, and just broke through. That's what tends to happen. So then we had this huge buying pressure, boom, 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 sell off, boom. Now this 200 moving average line just bounced it all day. Now I was buying shares all in here. Now I was pretty much just moving my average down, and so when we have this rally, which we're doing right now, and it breaks above pretty much this line right here at 180, I'm going to be in the green. So, this is pretty much just an example of how moving average lines tend to act as support or resistance lines, guys. So that is it, though. I hope you guys learned something. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the weekend or week. Take care, everyone. Peace out.